Hi, welcome to the podcast for return on assets. So return on assets is a profitability ratio. It's kind of an interesting ratio. The way we calculate this is net income plus interest expense divided by our average total assets. Return on assets, which is sometimes called ROA, measures a company's success in using assets to earn a profit. Now, the way we get average total assets, you probably have got this figured out by now, but we take our beginning total assets plus our ending total assets divided by 2. And recall that the way we really do that is our total assets from last year plus the total assets from this year divided by 2. So, one explanation with this, net income plus interest expense. The reason that we take both of those items is because those are the two returns that our external providers of capital measure. So the way companies finance their assets, how they acquire assets, is either through equity financing, meaning stockholders have invested in the company, and stockholders are focused on how much net income the company is making, or they do it through debt financing, in which they've borrowed money from creditors. And creditors are most interested in interest expense. That's how much they are going to get paid back or earn from the money that they've lent. So by taking these two measures, net income and interest expense, we've taken the two measures that again those external sources of funds look to use to determine how successful the company is doing. So we're basically saying how well is the company using its assets to generate net income for the shareholders and pay interest expense for the creditors. That was good. That last part was really good. I should have just skipped some of that middle and just gone straight to that. All right, so let's look at the income statement. And what we're looking for here is net income for the shareholders and interest expense for the creditors. And our balance sheet. Total assets for this year plus total assets of last year divided by 2 gives us average total assets. And so we put that together, return on asset, and we come up with 25%. By the way, on average, 10% is a pretty good number, so this number is really good. And you can see it measures the overall profitability for creditors and shareholders. All right, that concludes the podcast for ROA, return on assets.